Hello, welcome, welcome, welcome. My name is Elise Summers, and I'm a Customer Success Manager here at ClearRisk. I want to welcome you for joining us today here at our webinar for a higher cost for less coverage, operating in a hard market. For those of you who are not familiar with ClearRisk, we are a risk and insurance management software company based in St. John's, Newfoundland, Canada. So that's a little island right in the middle of the North Atlantic if you're not familiar. Our goal is to optimize risk, reduce the frequency and severity of incidents while reducing the overall cost of risk to our customers. We are excited to kick off our webinar series here at ClearRisk with this topic on the hard market because we have some fantastic speakers to share with you. The agenda today is a short presentation on the hard market by Meghan Callaghan, Vice President and Public Sector National Practice Leader at BFL Canada. We also have Craig Rowe, CEO of ClearRisk, and Jolene Ramsay, the Insurance and Risk Management Officer at the City of Kawartha Lakes. They will then join Meghan and talk about the strategies to combat the hard market. We'll open the floor and take questions from the audience. Before I bring Meghan to the stage, I want to run through a few housekeeping items. Now, if this was an in-person event, this would be where I highlight emergency exits and probably encourage you to eat the cookies that are provided, so I don't. But in the virtual world, I just want to showcase some of the features of the webinar platform we're currently using. We encourage you to leave comments or reactions in the chat function on your right. FYI, this is a public forum in case you put anything there, everyone can see it. We do plan on hosting many more webinars in the upcoming months. So if you enjoy your time here today, click on the poll function down below. There's a button and select yes, I want to hear more about upcoming webinars. We would also love to receive questions from you for our speakers throughout the webinar. So click the button, ask a question below, and enter your question or multiple questions at any point. You can also have the ability to upvote other people's questions. We will do our best to answer them, but if not, we'll reach out afterwards and do our best to answer. Last but not least, if you have to leave early, if you want to rewatch this webinar or to share it, the link you used to join here today will continue to host the recording of the event. Just sign back in and start watching the recording. On that note, I'd like to invite Meghan Callaghan, Vice President, Public Sector National Practice Leader at BFL Canada, to the stage to give a short presentation on hard markets. I'll add her here now. Hi, Meghan. I'm gonna remove myself and let you take it away.
Great. Thanks, Elise. Good afternoon, everyone. Thank you for attending. Even though it's virtual, it is nice to see some familiar names on the right-hand side of the screen here. And thank you to Craig and ClearRisk for inviting me to participate in this webinar. I think it's going to be a great conversation between, three really important stakeholders in the hard market, which is, of course, insurance providers, insurance brokers, risk management or loss control solution providers, and then, of course, yourselves, the clients, municipal risk officers. I'd just like to point out on that slide here, that picture, I look far too excited and pleased to be an insurance professional, and clearly that picture was taken before the hard market hit. So if we can go to the next slide, we can start my brief presentation. I promise not to make it too painful and too long. I know that the hard market's been with us, for about a year now, and I'm sure all of you have participated in webinars or talked with your insurance partners about the hard market. But we thought it would be a good idea just to put up a few slides to give us some grounding around the market and laying the platform or the foundation for the conversation between Craig, Jolene, and myself. So the Canadian insurance market, we're focusing in this presentation on the property and casualty portions of the Canadian insurance market. And the insurance marketplace is comprised of two main players. You have Lloyds of London, and then you have your traditional insurance companies, which you'll hear us refer to as domestic insurers. Next slide. Here's a brief summary of our recent market cycle timeline. We're going back about 20 years here to give a brief snapshot. In 2001, we saw a short-lived hard market cycle, and this was triggered by the terrorist attacks on 9/11. But that only lasted for a short period of time. Within a few months, we saw a correction back to a soft market, and we had a very long ride there, a good ride from 2002 to 2019, where we saw extensive soft market conditions. 2019, we saw the market moving into a correction mode or into the transition mode. And by the time we hit Q1 of 2020, we saw that we were firmly in the hard market and having to navigate the very different conditions and parameters that a hard market offers versus a soft market. Next slide. This is a brief summary of hard market versus soft market conditions. I think it's really important to highlight this again and again, even though I am beating a dead horse. It's just so important for us to understand the conditions and the parameters with which you as purchasers of insurance and we as insurance professionals have to navigate. In a hard market, the focus is on profitability and bottom line results. We're looking at reduced capacity. At one point, insurers were willing to write 100% of a risk. In a hard market, they really look to reduce their capacity to, below 50 or even 40%. Insurers are focused on charging premium commensurate with the risk that's insured. We look at deductible reviews. There could be reduced coverage offerings, and whether that's new exclusions or lower limits offering. And we have a return to disciplined underwriting. The soft market, insurers are focused on that top line growth. They want market share. They're focused on growing their books, extensive capacity, back to that willing to write 100% of a risk, very flexible underwriting requirements and parameters. We see high competition, which drives premiums down, drives deductibles down. Insurers are willing to be creative and have broad product offerings. And really, they have incredibly flexible underwriting requirements and parameters. The question is always, what tips us from a soft market to a hard market? And, there's lots of bigger brains than mine working on that behind the scenes. There's a lot of different factors, but really the Coles Notes version, the dumbed down version for brokers like myself, when we have large losses with low premiums combined with loss of investment income for insurers, that translates into a hard market. Insurers can't necessarily be collecting $1 in premium and paying $1.20 in claims and have that as a sustainable business model. We were able to have that formula of $1 in premium and $1.20 in claims for a while during the soft market because investment income offset the underwriting results. Next slide. Out of all the slides, I think this one's the most important to focus on. What makes this hard market different from previous cycles? Previous hard markets were characterized by insurers taking a blanket approach to premium and deductible increases. It really was just a scattershot approach. We need more premium. We're losing money from a claims perspective. We need to collect more premium. And all classes of business, all product offerings saw that premium and deductible increase. Prior to the 2020 hard market cycle, insurers didn't necessarily exit from specific classes of business carte blanche in order to improve their balance sheets. They really depended on that premium and deductible increase rather than looking at their portfolio and deciding what do they specialize in best and how do they work to improve the underwriting results for classes of business they're comfortable with rather than classes of business that perhaps isn't performing that well for them. In today's market, insurers are taking a much more nuanced approach, and they're taking a critical view and digging down and looking at the specific segments or classes of business that they write. Improved data and analytics are utilized in the underwriting process to better understand risk or understand classes of business. And that fourth bullet point really is, I should have done it in red and bold and underlined, because that really is what has changed. we're looking at data and analytics, and insurers are using that to drive their business decisions. So in the current hard market cycle, we've seen increased premiums, increased deductibles, restricted terms, and limited capacity. And again, all driven by that data and analytics, which 20 years ago weren't as sophisticated or savvy, and also wasn't necessarily a widespread tool that was used by insurers. Next slide. These are the quick snapshot of market results for the Lloyds of London and those domestic Canadian insurers. We can see that ultimately it's about the results, and from a Lloyds of London perspective, their combined loss ratio was over 100%. We're at 110%. And the Canadian insurers, they definitely had a better year than Lloyds, and we can see that the combined loss ratio in 2020 was just under 95%, which certainly is an improvement year over year. But what's interesting about those results is that really it's hard market conditions outpacing claims inflation. So the top line growth, or the premiums that we saw collected, you had an increase of 18%. And the claims moved up 17%. So really, the hard market conditions and those increased premiums are barely outrunning the claims at this point. And so certainly what insurers are telling us they want to see is that year over year, they want to see that the premiums outstripping the claims movement. I wish I had a crystal ball and could say that a light switch is going to flip and that, we're going to move out of the hard market in 6 months, 8 months, 12 months. I mean, certainly that's not the case. I don't have that crystal ball. Insurance experts and then the insurer side are certainly saying that, they're looking at another year or two or even 3, but ultimately we can only go on a year by year basis. Try to better understand and use those tools year over year in order to ensure that insurers are sustainable and are healthy and are able to offer products over the given term. Next slide. So 2021, the insurer focused lines of business that I feel are really insurers are going to dive down on. And sadly, I think, those 4 icons pretty much summarize most, if not all, of your insurance program or the packages that you purchase. Primary and excess liability remain challenging. We say that liability is a long tail line of business. And in rough terms, that means that for any given policy year or contract year, insurers don't really understand the losses experienced in that contract term or policy year until several years down the road. And so that takes a while to understand, are we charging the correct premium commensurate with the risk? And then from an excess liability perspective, the soft market conditions allowed insurers to offer a lot of high limits, and paired with low premiums. So insurers are now looking at, do we continue to offer those high limits? And if we do, we now need to start charging the right premium. Commercial auto, we continue to see increased claims activity. Rates were artificially low. Insurers are looking to see some correction on a rate perspective. Property, I think we can all agree that annual large nat cat or natural catastrophe losses continue to happen every year, whether it's forest fires or floods or hail. Every year, Canada in particular, but certainly the globe in general, continue to see those kinds of property losses. Cyber is a line of business, a policy that's a hot topic that we've seen in the news consistently. And the reason why cyber is up here is that it really is a maturing marketplace. We didn't necessarily see a lot of losses. The insurers didn't quite understand, where the losses were going to come into place because it was such a new product. Now they have, 7 to 10 years of data, better understand where the losses are coming from, what they can expect, what trends from a severity or frequency perspective they can see. And so the cyber market is definitely heading into, what I would say extreme hard market conditions. Next slide. This is just a brief overview of how insurers are reviewing your risk in a hard market. And ultimately, it's coming back to insurers, underwriters are returning to underwriting discipline, and they want to understand your risk. They're looking at your loss history. And that you'll see that 10+ loss history, that follows through every single column that I have put up here. They want to understand your loss history, and then they want to understand how you as the insured have reviewed your loss history, understand your risk exposure, and taken on risk management practices or loss control procedures that help improve your overall risk profile. From a property perspective, they want to understand where your buildings are located. Are you in a flood zone? Are you in an earthquake zone? What's your proximity to your fire services? What's the construction of the building? Frame, concrete, fire resistant? Do you have fire protection? Are these buildings that have sprinklers and alarm systems? And insurers want to understand what their probable maximum loss exposures are at any one location. From a specific municipal perspective, for those who join us from a municipality, do you own buildings all on the same block, so that if one caught fire or there was an earthquake, would that impact several of your buildings, and what are those values? Next slide. I think automobile is, fairly straightforward. Cyber, like I said, this is a very hot topic right now in the insurance market. Insurers want to understand what your municipality is doing from a cyber hygiene perspective. They want to understand your systems and security, what kind of awareness training you're implementing. Do you have multi-factor authentication? What's your email security? Do you perform routine backups? What's your password management policies and procedures? You'll notice on your upcoming renewal for any cyber product that you're purchasing, they're really wanting to have much more extensive information to understand, your organization, are you doing your part in order to mitigate any potential losses that are coming through? So all that to say is that, yes, we're in a hard market. Yes, it's challenging for purchasers of insurance. But the good news is that, there are people out there, whether it's your insurance partners, whether it's tools like ClearRisk and their system from a risk management perspective, and certainly from the resources that you have internally at your organization, we can work together collectively to better improve your risk and sort of alleviate and get best results from the insurance market. And that's why it's exciting to have this conversation today, is how do we work together? How do we get best results so that we can get favorable terms from the insurance market? And how do we keep this at the forefront, not just when it's a hard market, but also when it's a soft market? Because again, history shows us soft markets are longer than hard markets. But, if anyone thought that we would have been sitting through a pandemic, we're going on whatever it is, month 15, month 16. I think what that's taught us is that history is not, while we should definitely learn from it, it's not necessarily a good metric for what's going to happen in the future. And so someone like myself at BFL or Craig at ClearRisk, it's so important for us to engage with our clients, municipalities, public sector organizations, so that we can create best solutions, so that your organization, your municipality, can ride out and be prepared for whatever market cycle you encounter. Because at the end of the day, your insurance products are only a part of your risk management pie. I mean, historically, we've always talked about that insurance is the pie and risk management is a slice, when actually it's the inverse. Risk management is your pie, and how you manage risk is how you train staff, how you hire staff, you know, how you decide to spend your funds, what do you do to upkeep your buildings. All of that is managing your municipalities or your organization's risk. And again, insurance is an important risk transfer or risk financing part, but it's only a part. And so we need to engage each other as to how to better improve your risk profile, so that even when you have losses that aren't covered by insurance or are under your deductible, your organization is well positioned to, you know, weather whatever is thrown at you. And that's it on my end. I think it's a great opportunity for Craig to come on stage, as we say. I continue to have the Price is Right, Bob Barker, come on down in my head every time I do these webinars, but I will refrain from embarrassing myself.
Thanks very much, Megan, for that. That was really good. But at the same time, it brought back some very painful memories when I was the municipal risk manager myself, because I had just started as the risk manager for City of St. John's a few months before that hard market hit in 2001. So one of the first things that I did when I got there was I started sending notes, memos to council and senior management that this hard market was coming, so that I wouldn't get blamed for it. Welcome, Jolene. As Elise said, Jolene's the risk manager for City of Kawartha Lakes in Ontario. So this is great. So let's have a chat. A lot of things came up there from that. I got a lot of questions. My first one is, why don't insurers learn? I mean, it always drove me crazy.
That's a great question, Craig. I'm an insurance broker, so I can't speak for the insurers, and I ask the same thing. Why don't insurers learn? And, you know, and it's interesting and certainly, you know, frustrating from a broker perspective that, you know, I call it bad behavior. You know, we want everyone to be responsible, you know, corporate citizens, and we want to make sure that we provide stability and stable products. And, you know, insurers just seem to not be able to catch on to that wind. And so when they're focused on market share, they dive down and they charge incredibly low prices, and then they wait for someone to peek their head above the parapet, and then they're like lemmings. As soon as someone else does it, then they're all off to the races, and they're all climbing up the mountain. And I don't have a good answer for you, because it's a daily frustration.
Whenever I explain the difference between property and casualty and life to anybody, I always say that's the more stable business, more predictable business. They don't go crazy trying to outprice everybody. They go strictly by their underwriting guidelines, and I'm envious of them. Jolene, what were your key takeaways from Megan's presentation? Anything you wanted to jump in on that really caught your attention, that resonated with you?
Really, for me, the last two slides, when Megan went through, you know, how and what insurers are looking at the time, you know, when they're looking at your business. We last year went out to RFP, and I think it goes for RFP, or if you're going through your renewal, really looking at those last 10 years of your claims history, and being able to tell that story of your claims, and, you know, digging deeper into exactly what you're doing risk management wise. You know, we're always going to have losses, we're always going to have the claims, but what specifically are you as a municipality or as an organization doing with regards to those claims? Because a loss history from your insurer really doesn't give the true picture of what you're dealing with or what you have done. So I really, for us at the City of Kawartha Lakes, taking that information and building on it, and using the data that we collect in our system to expand on that, and to really showcase what we are doing risk management wise, you know, with respect to our claims and mitigating future losses. And the other issue too that we were dealing with last year was building on our property schedule, because of the issues with the property insurance market. We had a property schedule, but then we had to expand on that to include the COPE data. So your construction, your occupancy, protection, your exposures. And that was a huge undertaking for us at the city to expand that out, because I'm not sure if all municipalities are like this, but a piece of that information seems to lie within various different departments. So it's a matter of bringing that all together to showcase to the insurers, what our properties are, what the protections are, and again, just trying to improve our risk profile for the insurers.
Excellent. Megan's video, I'm assuming she just went off video for a second, I hope. Okay, yeah, so you mentioned about the 10-year loss history and the property schedules and stuff, and again, don't want to do, I'm going to do some shameless plugs for ClearRisk, don't get me wrong, but I'm not going to do too many. But so that's sort of at the core of, of one of the things that we do is when I was risk manager, one of the reasons I started this company in the first place, because, all this information was in spreadsheets and it was pretty flat, right? And like you said, it was, if it was black and white, it wasn't even, as opposed to, it was Technicolor, but now I guess video, high definition video compared to the black and white in Excel. But can you just talk about that? Like, what are insurers, and Megan, to you too, I guess after, but what is it, how much level of detail are they looking for? But I guess what I'm really trying to get is, what do you think that the impact is, the results of being able to show them really good, concise data, comprehensive data, versus just throwing, information at them, giving them actual data? What's the? I
mean, the positive results know no bounds when you can give them, as I always say, we've got to kill underwriters with kindness. And kindness in this instance is data to combat data. So back to my original, one of the slides was talking about a data analytics is taking the front seat and how insurers are making decisions. And I think we know that most businesses, whether it's insurance or not, data and analytics is a tool of the future. And so we need to fight data with data, right? So if they look at that 10-year loss history and they see that there are some trends, that's all they're going to go by, is they're going to plug those, those claims figures into a system, and the actuarials are going to have a heart attack, and they're going to throw a premium number at you. So what we want to do is build a story, really understand what happened in that loss and why, and then illustrate what the municipality has done to combat that. So I'm going back a little bit to what Jolene commented on about insurer loss runs are pretty sparse. They have a couple of lines describing what the loss was, and then you have your reserves and your claim, and then your total incurred, right? And it's so important to drill down and to better understand what happened on that individual claim. Is that something the municipality could have prevented? If it could, what kind of policies and procedures have been implemented, and showing that the municipality is tracking this and has skin in the game to want to actively improve their risk profile. From a property schedule perspective, it is so important. The more data, the better. It is so important for insurers to understand what the risk is that they're writing. If they see a submission, a total insured value of 400 million, and there's no underwriting data, no construction, no fire protection, insurers are always going to assume the worst. They're going to go, so
you're paying a premium on the fact that they have to make assumptions.
Yeah, you're paying a premium on assumptions. They immediately go to worst case scenario, and working with.
Wouldn't you, if it was your money you were investing? I always, as much as I don't like paying higher premiums, I always got it. I was like, you're asking them to invest in something that they don't understand. Of course, they'll always say no, or they're going to charge you.
Yeah, and I think it's about, back to your comment, and you say you won't do any shameless plugs, but I'll do it for you because it makes my job easier as a broker partner for our municipalities. Is that we've got to fill in the color. We have to create a story and get insurers and underwriters to understand your risk. And as a municipality, if you're not willing to take on some risk management, or you're not willing to improve your risk profile, we can't assume that insurers are going to really take on that risk. And so we need to be working together. Brokers too, we need to help our clients and really help understand and implement these, but starting to have tools so that a municipality can truly understand their risk profile, whether it's vehicle schedules, property schedules, contracts that are signed where you're transferring risk, what are your claims frequencies, what are you doing to implement risk management and loss control, so you can fill in the color and create a story where, yes, there's the data and the analytics, but we can show you why this is a risk you want to be on.
Jolene, actually, that's a really good lead into you guys. We did a case study with you. You increased your SIR by 1,000%. Like, you can't do that without data. You got to know what's going on to be able to have that risk appetite. Can you talk us through that?
Yeah. We definitely did. To offset premium increases, we had to take on more risk, and we looked at our loss histories, we looked at the claims that we had, and we felt comfortable in doing that. Really, risk management is top down, and we have that support here at Kawartha Lakes through various aspects with all departments. But going back to Meghan's comments about the loss history and the analytics, is one thing I want to say is if you're showing a trending of various claims. So for us, we had trip and fall claims, but then we implemented our sidewalk inspection program. So we were able to take our data of our past claims for trip and falls and pinpoint the date that we implemented our sidewalk inspection program, and then show how that risk management, from our engineering department, putting in place that well-documented program, dropped our claims for trip and falls and the severity of our trip and falls, and our defense. We're in a better defensible position. So being able to use that information. And the other part too is, again, going on identifying everything that you've done in the last 10 years and being able to really show from all departments what you're doing, how you're investing in your staff, how you're training them to do the importance of record keeping, and it really it comes through. But you have to advocate too on your own behalf. You have to show how you are a good risk that the insurer does want.
I would say, sorry, Craig.
No, you go ahead.
I was going to say, Jolene, I think, listening to you talk about your experience and the solutions that you're implementing, and, if I could rewrite the title of the webinar, it really is, yes, it's about operating in a hard market, but ultimately I think we need to step back. The hard market has spurred us on, right? It's sort of, forced us to have a hard look at what we're doing and how we're doing it. And let's use that to our benefit and start by looking at municipal risk and understanding how your municipality is tackling this and what is your risk profile. And then you start building out those various solutions, because you have deductibles. And even if it's a small deductible of 5,000 or a larger deductible of $1 million, you still have to pay a portion of a claim. And so it's about ensuring that your risk management or your risk profile is improving every year. I mean, risk management's a journey. Everyone starts at the beginning, and every year you work on things, you implement new procedures, you react to what you see is happening in your municipality. And that's going to help you just from a general perspective. And then you use that and you leverage that to get best terms from the insurance market. Mm-hmm. And that allows you too, is that you don't want to necessarily just take your eye off the ball in the soft market. Because yes, Jolene, you guys could go up to your deductible 1,000% to the hard market. But when a soft market comes along, it might be that there are premiums that are lower for lower deductibles and you can float down. But now you have the data. You can be an informed purchaser of insurance, no matter what market cycle it is. and be able to have your insurance program reflect, what that means or what the market's offering accordingly. So implementing or looking at your risk profile, implementing risk management is about you being in the driver's seat as a purchaser of insurance.
Yeah, absolutely. I agree 100% about just being informed, knowing what you're dealing with. I think gone are the days that you could just sit back and float through your renewal. It's a lot of work, and you have to be proactive and start months and months ahead and build that data and know the story yourself, so that you can project that to the insurers. The data that you can collect in a system, in a data management system, is, yes, it's for the insurers, but it also works behind the scenes to help your departments to understand the risk, because the more that you engage your staff and your departments, then they take on that risk management momentum as well within their own departments. And it's as simple as using the trending information for pothole claims to help support budget and hiring of a staff member so that they can to help reduce the claims, right? So it's so important for so many reasons, not only just the purchase of insurance, but internally as well, to support departments and get that buy-in and momentum going.
Is it safe to say that, the best way to insulate yourself from a hard market is to have less reliance on the market? So the more, the better you can do manage your own risk, with better retentions, higher retentions, and other, transfer mechanisms. I don't know if there's been more activity in looking at pools and reciprocals or captives or whatnot. But it seems to me that the best thing is insulation, because there's always been a capacity problem in municipalities in particular. There's just a limited number of markets that do that. It's a specialty, and the loss experience has been horrible. So is that sort of your take on it too? The more that you can do in house. Let's be frank here. The purpose of insurance should be to deal with unexpected losses, not the expected ones. But in order to be able to manage them in-house, you got to have the people and processes and systems to do it. You can't do that. Just say tomorrow I'm going to do it.
Exactly. That's the huge challenge, Craig. And, every municipality is different. There are some municipalities, and I would also say that I can completely understand how challenging this hard market is for everyone. And, it couldn't come at a worse time for municipalities. With your budgets have always been stretched, but, through COVID, it's just made it worse. And I think, unfortunately, it's not a one size fits all perspective or solution, Craig. Some municipalities don't have the budget to float their deductible up, from 5 to 10K might really stretch them. They don't have the sort of their internal resources. And a lot of time, from an insurance perspective, it is actually a small percentage of municipalities who fund, a risk management or claims management resource within the municipality. So it's
for a small municipality, yes, but are brokers stepping up to serve that need, Meghan? Because if you got a lot of municipalities that are big enough to have these problems, not big enough to have the wherewithal to fix them, it seems to me that a broker could step in there and say, we can be your claims intake. We can help you, triage this stuff and manage it so that you can have higher retention. Yeah, you can't just automatically say tomorrow I'm going to manage a $100,000 retention layer if there's no one inside to manage your claims.
Yeah, no, absolutely. And again, it's for each individual municipality needs a different solution, right? As I say, one size doesn't fit at all. But from a broker perspective, 100%, we're your partner in this. We're not your insurer, right? We are the broker. We want to help you navigate this. We want you to be able to address challenges or risks in the best possible light from a risk management perspective. We're here. We can offer you services. And if we don't offer them internally, we can certainly connect you with the experts in it. From a claims management perspective, that's a whole different discussion and webinar. There's a bit of a conflict of interest if a broker does not have its own claims division, separate at arm's length. But certainly there are claims adjusters that municipalities have worked with and have historical relationships. So there certainly are solutions in order to navigate the higher deductibles, but it really depends on the individual municipality's circumstances, their locations, their resources, and all of that in order for us to provide a tailored solution. Because for what works in, Southwestern Ontario may not work in Northern Ontario or BC.
Jolene, how much is buy-in from your senior management? How important is that to the ability for you to do that? And I guess, you have to be able to make the case to senior manager with that data. So can you talk about what kind of role that played, how you got to buy in and what role that played and what you've been able to do?
Well, risk management is embedded in our leadership qualities here at City of Kawartha Lakes. So in our performance management, when we meet quarterly with our leaders, or even at our annual performance review, we now have a section in our performance reviews, risk management, for us to identify throughout all the departments. So our planning, our building department, what are they doing to identify and assess risk? So it is there, corporately, top down, it is supported. We also, even going to the larger SIR, meeting with our department heads to explain the impact that it could ultimately have on the departments with that higher retention that we're taking on, and then meeting with them as well to go over our claims history. So what have we done with this particular claim, and what have we implemented, and making sure that we are corporately thinking about and identifying and finding ways to mitigate that. But certainly having your CAO, your senior management team support is imperative to taking on that extra.
Great. I got one question for you, maybe both of you, but Meghan, if you can just jump in first. The pandemic. What impact is the pandemic happening now, on this hard market that's already been around for a couple of years? What do you think the impact's going to be, and what, if anything, in addition to what we've already talked about, can people do to try to insulate themselves from even further impact by the hard market?
Well, if I could give you a definitive answer on the future, I would be going out to buy a lottery ticket. I think, I do no one any service by making, hard, concrete statements, but I would say that, the hard market was approaching and on the horizon before COVID. COVID has certainly complicated things and has, perhaps will drag out the hard market, but the hard market conditions that we saw were here before the pandemic hit. We really did see them in January, February of 2020. I would say that, a great place to start, and again, to use as your jumping point, is that just put insurance aside for just a minute. And again, look at what your risk management, your risk profile is, insurance being a slice, and have those internal discussions. This panel is kind of a perfect example of how a municipality can start getting better understanding their risk, getting their arms around their risk, and deciding what the next steps are, what the solutions are. You have your insurance partner as your broker. You have a risk management technology solution that will assist you to better understand your risk, get the data, and make informed decisions about your risk management and loss control. And then you have a municipal risk expert who is operating within your municipality, ensuring that the data that you have is yielding tangible results for your organization. And from this conversation and through the brainstorming and through the evaluation of the data, then you can make a decision about what's the best way to approach the insurance market, and then what's the best insurance solution for your individual municipality.
Right. Jolene, did you want to mention anything on the pandemic?
with us here, I'll take it in a different direction. With us as far as the pandemic, we haven't seen a reduction in claims. If anything, it's continued on, and it's strong as far as our workload. With right at the very onset of the pandemic, and I think our timing was perfect, and this will be a plug for you, but was putting into place the web portal, and I spoke about it in the case study, was having that ability. We had it set up right before everything changed, and allowing our residents and claimants to submit their claim submission right through the city's website, which automatically uploads into our ClearRisk system. It saved so much time for us that allowed us to dealing with the other risk management issues of just the pandemic in general. Setting up people working remotely from home, and all the various agreements that we were looking at putting in place as far as temporary hospitals and assessment centers or what have you. So it took that whole administrative function away, because the claims were automatically uploaded into our system. We were able to, send it over to our control adjuster and get them continue working on the claims that were coming in. And it was at a time where back at the beginning of the pandemic, we were concerned about touching surfaces and exchanging of papers and what have you. So it was an ideal solution that for us early on that really helped to ease the workload, especially when we're working remotely and not having access to our regular offices, and really did change a paper format office that we were at City Hall into a much more streamlined electronic. So
timing was good. Perfect. Lisa's joining us now. I think we got some questions.
We do. We have a couple questions that have come in. I encourage anybody who is holding on to one, put it in there, get it in now. We're going to start with a question from Patrick. He says, when did the higher emphasis on analytics start?
So insurers, have been looking at data analytics, for several years now. I would say it's not a wide brush. Every insurer is on their different journey of data analytics. Some have invested heavily in them and they're already well down the road from a program perspective and utilizing the data analytics, and others are just starting. So it would definitely, have been several years now. It was in its infancy, in the, sort of, I would say 2017, 2018, and has started to grow. But again, each insurer is on a different journey, and they've each made decisions around how to invest, when to invest. But certainly they're all looking at it now, and it will just depend on each insurer as to, what data they focused on and invested in at the beginning.
They'd probably tell you that they always were. Because they've always been very much, statistics driven, the actuaries. But I guess for us, what we've been saying is it's just now that the technology, the ability to collect and analyze big data sets. Insurers, it was natural for them to jump on that technology. And it's growing exponentially. Because they're all, I would say, by now using AI in some form or another.
Okay, great answer. We have a question from one of our American attendees. He says, combined loss ratio, ? We look at combined ratio with premium, brackets, claims plus expenses.
Somebody must have said combined loss ratio. I think it was meant to be the combined ratio. So it would be the same in anywhere, I'm guessing, as far as I know. Meghan?
That's correct. Yeah.
Okay, thank you. Oh, we have another one come in from Brad. We'll take one more. I can't believe we're 50 minutes in. Went by really quick. We have one more from Brad. He says, can you make a comment re cyber risk and municipalities? Can you explain what practices municipalities are employing to combat cyber risk, insurance, and other strategies? There appears to be a large gap between those prepared and those who aren't, as we hear in the media.
Yeah, municipal risk has definitely taken front and center stage, especially in Canada over the last, even just 6 months. It's from strategies that municipalities are employing from a risk management perspective. I would say that I'm not the right person to answer that question. I'm not a cyber expert. I'm not an IT expert. I'm not a technology expert. I can say that the municipalities who are having success are engaging security firms to review their policies and procedures. They continually are looking at their cyber hygiene and improving any gaps. And also, I would say for municipalities who purchase cyber insurance, it's incredibly important for you to use the resources that the insurer has on offer. Cyber insurers are very different from a property insurer or a casualty insurer. They really do have a suite of options for you to access to better improve your cyber risk and your systems, because insurers want you to protect yourself. They really feel they've got skin in this game, and they really want the municipality to improve their cyber profile. So they have a whole host, a suite of options that I would encourage every municipality to access, because it will help you. And from as I say, the cyber risk perspective, I think that's an entirely separate and in-depth webinar that you would want the experts in front of you to be working, because it's such a niche, specialty.
And I would agree. We're going through our cyber renewal right now, and the application process itself is daunting. And we've submitted everything to our broker, and expecting a report back to see where there is gaps, and to use the services that the broker is able to offer us for the risk identification and just even the training and phishing and that we can offer through to staff as well. So we're relying on our broker partner.
I guess one of the more notable ones that comes to mind is the City of St. John had a DNS attack last year, and they refused to pay, and it was an insured loss. I was just looking it up this morning in the media, and so it really hits home. I mean, it's a well-known Canadian municipality, so everybody's at risk of that one for sure. I've always wondered for a long time about cyber, and still do. How much insurers really know about it, and actually, how much risk managers actually know about it as well. I still think it's probably one of the biggest exposures that any organization has, and my sense is that we don't even. It's just like the pandemic. It's a risk. You have no idea the magnitude of the risk. I think that's how I view cyber. I mean, Jolene, is this something that keeps you awake at night? And other risk managers?
Here's a few things. I would say cyber's on the list.
Megan, how comfortable are you with the insurers that you deal with? Do they truly have a good understanding of that risk?
I think just generally, the cyber market, we're seeing in huge fluctuation right now. As Jolene outlined, suddenly the applications that used to be 2 pages are incredibly extensive now, as the insurers are seeing that we need to have our arms better around the risks that we're insuring and the exposures that we have. And it is, Craig, I think you're right. It's an evolving risk. You think there's a certain type of cyber risk, and then another attack comes along, and it's just, how do you keep up with it? And I don't know if there's the right answer with it. I can say that cyber insurers are getting better at, as I say, offering those suite of services to help you improve your risk. And the reason why they're doing that is they understand the question is not if, it's when. When will there be a cyber attack on our clients? And it's how do we best prepare them? And we're seeing insurers asking that extensive question, which Jolene and everyone on this call, I feel for you. And it'd be like herding cats trying to get your various IT guys to complete it for you. But it's also being shown that if you are not answering these questions, you may see that your limits are drastically reduced, because the insurers are not willing to offer full limits if an insured does not have the proper cyber hygiene in order to protect themselves. Because again, I think with cyber insurance, it's not if, it's when an attack is going to happen.
I agree. I think we got one more question, Elise, and we'll end it there.
Yep. This question is what is something that risk managers can start doing today with or without a system in place, like ClearRisk? What would your number one takeaway be?
I would say, from my perspective, and Jolene would be much better served to give you advice, but as the broker, I can't help myself. I will insert myself into the conversation. Is engage your insurance broker. Yeah. Get your list, your loss run. Request that the loss run have a fleshed out report around not just those three lines, but really understanding the loss, what happened, and why. And then, work internally with your stakeholders and work with your broker or your claims adjuster and start identifying your trends. As I say, everyone's on the different risk management journey. So that's your first step, is just to know where you are. What are our risks and where are we at from a claims trend or a loss exposure? And then you can make some decisions, and whether it's just 2 or 3 tweaks or different policies or procedures, that's a great first step down the road of improving your overall risk profile.
Mm-hmm. I do. I agree. Engage your insurance broker, your insurer as your partner, and find out what services they have to offer, whether it's training for staff, webinars. Do they have sample policies that you can easily put in place, such as a claims management policy? Do they have training for your counselors, and just even understanding your insurance program and your policy itself and knowing what you have? Engaging with even your legal defense, those that are handling your claims, and seeing if they can offer you any type of training or advice. Just reaching out for help. And if you're a smaller municipality, I would say making friends with your neighbors, the neighboring municipalities, and reaching out to them to find out, because you probably have similar claims and similar situations and risk management issues. So find out what they're doing. And that is a question that for our various departments, we go back to and say, okay, well, what are other municipalities doing? How are they tackling this risk? Because yes, we're different, but at the end of the day, we still have a lot of the common issues that we're dealing with. So if you could reach out for help and get some advice from your partners, your broker, other municipalities, I think that's a great place to start.
Excellent advice. I would just kind of add or summarize, I think, same as what you guys said, but just always be working on making yourself a better risk, but also document it. Make sure that it's no good to do it unless you're able to communicate with the insurer that you're working towards risk improvement. And of course, then it only really matters if it shows up in your results, right? Are you having an impact on your frequency and severity? So if you can show that your measures are making you a better risk, if you can show the underwriters, whether you have a system or not, that's the way to, you're going to get better rate if you can show better results. I think that's it. Elise,
yeah.
Are we done?
So there's one more question there from Melissa, but I'll get the answer. I'll send it to you guys and we'll get back to you, Melissa, with that. But we're coming up on the hour. So I just want to thank everyone. Thank you, Jolene and Meghan, for joining us today. Thank you, Craig, for moderating. Thank you, everybody, for coming and joining us. If you want to learn more about the work Jolene and Kawartha Lakes have done during the hard market, we encourage you to check out the View Kawartha Lakes case study button at the bottom. It'll open into a new window. So thank you again for everyone for joining. I hope you learned a lot and you continue to join us in the future. If you have any questions about what you learned here today, questions about ClearRisk, or specific questions about our speakers, please leave them in the Ask Question button below, and we'll get back to you as soon as we can. And also, please feel free to leave suggestions for future webinar ideas. We're always looking for what you want, and we'll help provide that if we can. So thank you again for joining us. All the best, and stay safe.
Thanks, Elise. Thanks,
Thanks,
Meghan.
everyone.
Thanks, Jolene.
Bye.
Thank you, everybody. See you.